let's discuss BTC price and more with ARCA Head of Research, Katie Talati. Katie, always great to have you. Great to have you on this afternoon. So Fed Chair Jerome Powell made a notable change from his Tuesday Senate testimony today in his prepared remarks before the House. Let's have a quick listen.
We have not made any decision about the March meeting. We're not going to do that until we see the additional data. The larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook.
All right, Katie, so what do you make of these latest remarks? Are they dovish?
I mean, I think based on kind of the market reaction overall, most people are still, expecting kind of a hawkish outlook from the Fed at this point, with the 50 bips starting to be priced in for the end of this month. From what I have seen, a lot of the Fed actions as of late have been, a lot of people are criticizing the Fed for being more politicized than it has been in recent years, and not being as kind of separate from the government. And it is difficult with, the economy having kind of all these up and down issues, politicians trying to control it, but then also having the Federal Reserve try to kind of keep their independence from that side of government. So with all that said, the market right now is still definitely trading on a kind of hawkish outlook that we're going to get another rate hike at the end of this month, even with the potential for, if there's softer economic data. They said they would revise it, but for now it seems like most people are in the camp of we're going to have 50 basis point rate hike by the end of the month.
And how will that impact risk assets such as Bitcoin going forward?
I mean, so we've seen definitely more of a decoupling, I think, this year from Bitcoin and more of the general broader market. Bitcoin has especially had some fairly positive catalysts in the last several weeks that have nothing to do with macro, mostly kind of around the growth of Bitcoin ordinals, which are essentially NFTs on the Bitcoin network. That's really picked up a lot in terms of activity and interest. And if that kind of continues to become a narrative behind Bitcoin, it really shouldn't be quite so tied to the overall macro landscape. But most people are kind of in the camp of until rate hikes end and until inflation kind of pauses or slows, we're going to be very much at the mercy of what the Fed decides.
Yeah, it doesn't look like it's slowing anytime. I'm just seeing U.S. private payrolls rose more than expected in February, according to an ADP report. So we're continuing to get economic data that is hotter than expected. So in terms of Bitcoin, near-term outlook versus long-term?
Near term, like I said, I think that there's definitely some excitement that's going to continue in the market around some of the ordinals projects that are going on. On a longer term outlook, a lot of people are already starting to talk about the halving, which is expected next May. That could also be interesting. I think the importance, though, for potential for projects like NFTs on Bitcoin is that really importantly, Bitcoin mining will eventually dwindle down and run out in the next couple decades. And the question is that can Bitcoin as a network stay secure through the fees that it earns on transactions? And at the moment, it doesn't. And so having kind of some additional activity could actually lend itself to having a more sustainable economic model in the future. But that is still very hard to predict. The Bitcoin NFT market is still super new, although very interesting and growing fast. So we'll be keeping a close eye on that for the longer term outlook.
Yeah, certainly. I've heard that argument that with the transaction sizes increasing and competition getting stronger with the ordinals NFTs on Bitcoin, that potentially that could lead to a way for miners to gain more rewards. They seem to be in favor of it. Also looking at the GBTC discount, the Grayscale Bitcoin Trust discount, that's narrowing to about 35% today. Could it be good for BTC in terms of institutional interest and more comfort into getting Bitcoin exposure?
I think, so the reason that the GBTC discount has been narrowing recently is due to Grayscale's kind of ongoing lawsuit against the SEC. So if you haven't been kind of clued in on this, Grayscale has their Bitcoin trust. It's a closed-end fund. They have filed several times to convert it into an ETF, which would allow for redemptions and liquidity. It would also cause the discount between GBTC and Bitcoin price to go away as people arbed it out. The SEC has since denied their requests to convert, and the belief, in the last few days, there's been some signs from some of the judges and some statements that have led some people in the market to believe that Grayscale might have a case against the SEC to win for ETF approval. Not honestly, no opinion on if that will happen or not, but if an ETF for Bitcoin is allowed, I think that would be really great for market participants. It would mean that, regular investors could get access to Bitcoin without having to worry about custody or storage of their Bitcoin. And it should just provide better liquidity on the market for the asset.
Yeah, and just note to viewers, Grayscale is a sister company of CoinDesk under Digital Currency Group. At the same time, Grayscale has been sued by a couple of firms, one of them being Alameda Research more recently, which is the sister company of FTX. And I'm wondering, what of these lawsuits will it slow the momentum of Grayscale in terms of their arguments and lawsuit against the SEC? Where do you see that headed?
So that lawsuit specifically is because Alameda has a bunch of Grayscale's, a bunch of shares for Grayscale's trusts on their books. And their claim is that basically, because of lack of liquidity and and the high fees on the trusts, they feel that those shares should be worth quite a bit more, and that they haven't made a good faith effort to create liquidity for those shares. Again, I can't really offer a legal opinion of any sort on what the outcome here is, or what the potential for this court, where this court case could end up. I think it's interesting to see that they are suing. It to me, it means, and by the way, obviously the Alameda current CEO is not somebody on the creditors committee, and their whole point, or their whole goal, is to basically get as many assets back for customers as they can. And in their case, that's kind of what they're doing. They're just trying to see how and when they can, and they're pursuing any avenue they can to get assets back for customers.
All right, Katie, we'll end it there. Thanks so much for joining us. That was ARCA Head of Research, Katie Talati.